What if I told you the story of money is really the story of power? For 5,000 years, every civilization, from pharaohs to presidents, has fought the same invisible war. Who controls value itself? Because money has never been about numbers, it's about trust, manipulation, and control. Today, we're told Bitcoin is digital gold, but to understand why that phrase matters, we must go back, way back, to when gold itself ruled the world. And somewhere along that journey, you'll see how every financial system eventually collapses for the same reason. The real question is, are we next? Before banks or coins, there was barter. People traded cows for grain, salt for tools. It worked until it didn't. You couldn't cut a cow in half to make change. So humanity invented symbols of trust, shells, beads, and metals. And among them, gold stood out. Not for rarity, but reliability. It didn't rust, didn't rot, and couldn't be printed. By 3000 BCE, gold was sacred. Pharaohs were buried with it. Priests waited in temples. And kings learned, control the gold, and you control the kingdom. Around 600 BCE, in Lydia, modern-day Turkey, the first gold coins appeared, stamped with lions to guarantee value. Money became a brand, a ruler's promise carved in metal. As Greek and Roman empires expanded, so did their coins. But wars drained treasuries, and gold couldn't be mined fast enough. So they cheated. Rome began mixing cheaper metals into its coins. Debasement. At first subtle, then reckless, until soldiers refused payment. Rome didn't fall to invaders. It collapsed when its money lost trust. And that pattern, creation, corruption, collapse, would echo through history. By the 7th century, the Chinese Tang dynasty introduced paper money. Light, convenient, and revolutionary. At first, each note represented gold or silver. But paper was easy to print, and temptation followed. By the 1400s, inflation destroyed the system. Yet the idea survived. Money could exist without metal. Europe adopted it centuries later. Merchants used promissory notes for trade. Banks held the gold and issued paper. Power shifted, from kings to bankers. In 1694, the Bank of England was founded to issue notes backed by gold. But the gold stayed locked away. Promises moved faster than metal. Money had become belief, a promise of value, not value itself. By the 1800s, the gold standard defined the world economy. Each currency represented a set amount of gold. It brought stability, but limited governments. You couldn't print your way out of debt. Then came World War I. Nations printed money to pay for war. The gold standard collapsed. In Germany, the mark became worthless. People burned banknotes for heat. When money lost meaning, faith and nations collapsed. In the 1930s, during the Great Depression, President Franklin D. Roosevelt ordered Americans to surrender gold. Paper money replaced it. By law, not by choice. In 1944, the Bretton Woods system crowned the US dollar as the global reserve currency, backed by gold. But by the 1960s, US spending exploded. Vietnam, the space race, welfare programs. Dollars outnumbered gold reserves. Foreign governments demanded gold in exchange. So in 1971, President Richard Nixon ended the gold standard. Money became fiat, value by decree. It was meant to be temporary. It never ended. Freed from gold, governments gained infinite printing power, and they used it. In the 1980s and 1990s, credit became the new currency. Debt fueled growth. Every boom was bigger, every crash deeper. Productivity rose, but wages stagnated. Because when new money enters the system, it benefits those closest to the printer. Banks, corporations, governments. By the time it reaches the public, prices have already risen. This is the Cantillon effect, the hidden tax of inflation. Then came 2008. Banks gambled, crashed, and were bailed out with newly printed dollars. Ordinary people lost homes. The rich recovered. Faith in the system broke. From that collapse rose a rebellion, Bitcoin. In 2008, an anonymous figure named Satoshi Nakamoto released a white paper, Bitcoin, a peer-to-peer electronic cash system. It proposed a new kind of money, mathematical, decentralized, and incorruptible. Only 21 million coins would ever exist. No printing, no bailouts, no manipulation. The first Bitcoin block carried a message from the Times. Chancellor on brink of second bailout for banks. It wasn't just technology, it was protest. Bitcoin replaced political trust with code. Don't trust, verify. History repeated itself yet again. Empires rose on sound money, decayed on paper promises, and collapsed under debt. Today, global debt exceeds $300 trillion. Inflation silently erodes savings. Since 1971, every major currency has lost over 90% of its value compared to gold. The average U.S. home that cost $25,000 now sells for over $400,000. A $1970 buys only 15 cents of goods today, and governments keep printing. Meanwhile, digital currencies rise, not because they're perfect, but because they expose the flaws of the system. But a new paradox is forming. The same technology that could free us could also enslave us. Central banks worldwide are developing central bank digital currencies, CBDCs, programmable, trackable, controllable money. Imagine a system where your funds can expire or your spending can be limited by policy. Convenience, traded for control. History shows that every empire debases its currency before it collapses. Rome mixed silver. France printed paper. America printed dollars. Now, the world prints data, but this time, the fall might not be visible. It could be digital, a silent reset, where numbers vanish and code replaces coins. Bitcoin stands as both warning and alternative, decentralized, transparent, immutable. Yet even Bitcoin faces its flaw: human nature, greed, speculation, regulation. Technology doesn't erase our weaknesses, it amplifies them. Rome thought debasement was harmless. Germany thought printing would bring stability. In 2008, debt was called leverage. And now, in 2025, we think digital money will save us. But 5,000 years of history say otherwise. No system survives when trust turns into control. Every monetary cycle follows the same pattern: sound money, promises, abuse, collapse, rebirth. It's not just economics, it's psychology. We crave stability, but chase growth. We want hard money until it limits us. We want easy money until it destroys us. Bitcoin didn't appear by accident. It's the immune response of history, a pushback against manipulation. And whether it survives or not, the idea, freedom through decentralization, is irreversible. Money isn't value, it's belief. Gold, paper, or code, it only works as long as we trust it. But every system built on unlimited creation eventually collapses. Inflation isn't an error, it's design. From gold buried in tombs to code mined in servers, the story of money is the story of civilization. We've gone from trusting kings to banks to algorithms, but the question hasn't changed. What is money really worth when belief itself becomes the currency? History whispers that every reset comes disguised as progress. Maybe Bitcoin is evolution, maybe it's rebellion, or maybe it's just the next chapter in humanity's endless chase for control. If this story opened your eyes, hit subscribe and stay with us, because next time we'll uncover how debt became the engine of modern slavery and why the next financial revolution might already be unfolding in your pocket. This isn't financial advice, it's financial awareness. And as history proves, those who understand money's past own their future.